The third time is not a charm. The International Monetary Fund cut its global economic growth estimates for the third time this year, warning of slower growth in core eurozone areas, Japan, and in big emerging markets like Brazil. IMF chief economist Olivier Blanchard.
The recovery continues, but it is weak and it is uneven.
The new data, which roiled stock markets on Tuesday, showed the overall expansion forecast down to 3.3% for this year and 3.8% in 2015, dragged lower by weakness in some key economies. The United States showed a slight improvement, while the advanced economies remained unchanged to lower. China, a key driver for the global economy, showed tepid growth. S&P Dow Jones, Howard Silverblatt.
China, which is having difficulty with the 7.5% expected growth that they officially are still trying to keep, may not make the mark. So the growth is down. Relative to the rest of the world, though, the U.S. is still looking better. Obviously, we're nowhere near the 7.5% that China is hoping to obtain, but the U.S. is still maintaining strong growth and has relative stability, so we're seeing more money come in.
And there is a sense that the positive sentiment tied to the richer economies may be underestimated. Bill Adams, senior international economist at PNC Financial Services Group.
I think the IMF downgrade is taking into account that a number of troubled spots around the globe are growing more slowly this year than they'd expected. But at the same time, we are entering into a period where the U.S., the U.K., Canada, Mexico, there are pockets of the global economy that are doing well and are close to normal. So as parts of the economy, the global economy, normalize, we could see better business sentiment, better investor sentiment, more appetite for risk in the real economy, and that could lead to faster investment, faster hiring, and faster growth.
The projections set the stage for this week's economic policymakers meetings in Washington, D.C.
Should be interesting. For more on why the IMF lowered its forecast of global economic growth, CCTV's Zhou Yun sat down with the IMF's chief economist, Olivier Blanchard, in Washington. Blanchard started by answering if he's worried about China's stalling economic growth.
No, because I think there is a slowdown in housing, there is a slowdown in credit, but this was largely anticipated. So our forecast, even before, reflected that, and therefore we're not surprised by what's happening. So for the moment, we stick to our forecast. We think that growth will be a bit lower than it used to be, obviously, but we're not changing the numbers. Now, clearly, things can always be worse. The housing slump can be stronger. It might be difficult to offset with other measures, but we remain fairly confident about our forecasts.
How would you interpret those slowdown? Do you take them as cyclical changes, or do you take them as the changes brought by the reform that are carried out by Chinese government?
For the moment, much of the slowdown is due to the slowdown in real estate, in housing. I think what we're seeing is a housing boom, and hopefully not too bad a housing bust. I think that's what dominates the scene. Now, looking forward, what we all want, the Chinese government, the third plenum, the IMF, is to see a reorientation of growth from investment to consumption, and that's likely to come with lower growth. And this is why when we think about Chinese growth in the future, we have lower numbers than the numbers today. But I don't think we've seen this happen on a major scale yet. At this stage, it's very much a housing credit cycle than what we want to happen.
Now we're kind of seeing two different directions in terms of monetary policy, because the Federal Reserve is tapering and is talking about interest rate, and the ECB is trying to carry more stimulus package in order to boost the economy. So what impact do you think all those capital inflow and outflow and market volatility will bring to emerging markets like China?
So I think that's an important issue, but mostly for the relation between what's going to happen in the eurozone and the US. And clearly, if the US starts increasing interest rates and the eurozone does not, that's going to put upward pressure on the dollar, downward pressure on the euro, and we're already seeing some of that. For emerging markets, it depends very much as to whether you're trading more with the eurozone or more with the US. But I would say in general, the US tightening is going to be the big event. It is going to be what leads many countries to increase their interest rates and face capital outflows, or at least a decrease in capital inflows.
Another new challenge that brought up in this report is called a mediocre level of growth. Yes. So what are the countries that you think might have these problems, and what can they do? I mean, policymakers in these countries can do in order to inject more new momentum into their economic growth?
So I think by new mediocre, we mean something a bit more technical, which is low potential growth, which is the growth that you can hope to achieve over the next 5-10 years. And what has happened here is that in a number of countries, we've revised our estimate of potential growth down. We've done this for advanced economies. It was already very low in advanced economies, in particular in Japan. But in many emerging market countries, we've revised potential growth down by 1%, 1.5%, a substantial amount. So the future is not as bright as it used to be. And that creates challenges. So, emerging markets are still going to grow at a high rate, but not quite as high as before, and therefore they have to adapt to that.